Most traders lose money because they try to catch reversals, but professionals follow the direction of the trend. Today I'm going to show you a powerful trend continuation scalp strategy that helps you catch fast, clean moves with the trend, not against it. Using only RSI and Heiken Ashi, you learn how to read the trend, enter at the perfect moment, and manage risk with precision. By the end of this video, you'll have a simple step-by-step system you can use immediately on any short-term chart. So stay with me until the end. Why trend continuation works? Many beginner traders try to predict market reversals. They want to find the exact top or the exact bottom and then trade against the trend. But on very short time frames, this is very risky. Reversal trades often fail and stop losses get hit quickly. Instead, we focus on trend continuation. Trend continuation means trading in the direction of the main trend, not against it. When you scalp with a trend, you are moving with the market's momentum. This makes your trades cleaner, smoother, and easier to manage. In this method, the goal is not to capture the entire move from the bottom to the top. The object is simply to capture a portion of the move, take your profit, and exit quickly. So, in this strategy, we always follow the trend. We don't try to guess tops or bottoms. We let the trend carry us. Tools used in this strategy. In this strategy, we use only two tools and both are simple to understand but very powerful when combined. The first tool is the RSI or Relative Strength Index. The second tool is Heiken Ashi candles. Each tool has a clear role. First, RSI helps us identify the overall market trend. It tells us who is in control, buyers or sellers. Once we understand the direction of the trend, we use Heiken Ashi to time our entries and find clean moments to enter the market. Together, these two tools create a simple and structured way to scalp with clarity and confidence. Using RSI to determine the trend. Let's start with RSI. The RSI or Relative Strength Index is a tool that measures the strength of buyers and sellers. RSI has many different uses, but in this strategy, we use it in a very simple way to identify the direction of the trend. RSI gives us a value between 0 and 100. When RSI is above 50, buyers are stronger and the market is generally moving upward. When RSI is below 50, sellers are stronger and the market is generally moving downward. By checking RSI first, we can clearly understand the market direction. If the trend is up, we'll look only for buy trades. If the trend is down, we'll look only for sell trades. Think of RSI as your trend guide. It shows you which side controls the market and helps you trade in the right direction. What is Heiken Ashi and how we use it? First, let's understand Heiken Ashi candles. Heiken Ashi is a special type of candlestick that smooths out price movements and makes trends much easier to use. Unlike regular Japanese candlesticks, which show the exact open, high, low, and close of each period, Heiken Ashi calculates its values using averages. This means the candles move more smoothly and small market noise is filtered out. Because the chart looks cleaner, it's much easier to identify the real trend. In an uptrend, a green candle without a lower wick shows that buyers are strong and momentum is continuing. In a downtrend, a red candle without upper wick shows that sellers are in control. In this strategy, we use RSI to know the trend and Heiken Ashi to find clean entry signals. Entry rules. Now let's see how we use RSI and Heiken Ashi together to enter a trade. First, check the RSI to know the trend direction. If RSI shows an uptrend, we only look for buy trades. If it shows a downtrend, we only look for sell trades. Next, watch the Heiken Ashi candles on the chart. When the trend is strong, you will see several candles of the same color in a row. The perfect entry candle is the first candle that has no wick going against the trend. In an uptrend, this is a green candle with no lower wick. In a downtrend, It's a red candle with no upper wick. As soon as this candle appears, we enter the trade at the open of the next candle. This gives us a clean entry that moves with the market momentum, not against it, increasing our chance of a successful scalp. Practical example number 1, buy trade. Let's look at a buy example on a 5-minute chart. RSI is at 60, showing a strong bullish trend. This means we only look for buy setups. On the chart, you can see 3 green Heiken Ashi candles forming in a row. The first green candle without a lower wick is our entry signal. As soon as this candle closes, we enter at the open of the next candle. For risk management, we place our stop loss just below the last swing low and our take profit at the previous swing high. Notice how the price moves upward smoothly, giving us a clean scalp trade with minimal risk. Practical example number 2, sell trade. Now let's look at a sell example on a 5-minute chart. RSI is at 40, showing a strong bearish trend. This means we only look for sell setups. On the chart, you can see red Heiken Ashi candles forming in a row. The first red candle without the upper wick is our entry signal. As soon as this candle closes, we enter at the open of the next candle. For risk management, we place our stop loss just above the last swing high and our take profit at the previous swing low. Notice how the price moves downwards smoothly, confirming the trend continuation. This gives us a clean short scalp trade with minimal risk, entering only when the momentum is strong and the trend is clear. Okay, that's today's lesson. You've learned a high probability scalp strategy using RSI and Heiken Ashi. Start by practicing on a demo account and see how it works, and then move to a real account when you feel confident. If you found this lesson helpful, like this video and subscribe for more practical trading strategies. Comment below if there is a topic you want me to cover. I'll make a tutorial just for you. Thanks for watching, and I'll see you in the next video.